All right. Let's give it a little bit for people to join. Morning everyone, we'll just give it a few more minutes for people to join. Feel free to start putting in questions on the Q. If you look down the bottom of the screen, if you're on Zoom, there's a Q&A icon. I can see someone has already popped in a question. So yeah, type your questions in there, and the way we normally do this is we'll answer the questions as we go along and try and answer them in the relevant part, especially if it's not already covered by the presentation. Sally, while we wait, yes, you do need corporate tax. If you're a company in a free zone, you absolutely need to be registering for corporate tax. We'll get to all of this. And VAT as well, if you reach the thresholds. We'll just give it another couple of minutes. We've still got people coming in. Shabazz, thanks for your question. Yeah, we'll cover that. Service vendor asks for tax numbers. All right, another couple of minutes. I'll just jump through some questions as we go. Oliver, if a vendor is asking or a client is asking for a tax number and you're not at the VAT threshold yet, if it's an overseas client, once you register for corporate tax, which you'll have to do, you'll have a corporate tax TRN, so you can use that. If it's a UAE vendor, try and use the corporate tax TRN and explain to them that you're not you don't meet the VAT threshold. They should understand that. It's normally just internal processes that are making them ask for a TRN. Frederico, will cover your question as part of the presentation. All of these other questions we will answer. A lot of people asking, do I need to register? Okay, cool. All right, let's get started. Most of the questions I've seen come through we will be answering as part of the presentation. But again, send them through as we go. For those of you that have just joined, if you look at the, there's a Q&A icon at the bottom of your screen. If you click on that, it'll bring up the little Q&A box and you can type your questions in there. We will try and answer your questions as we go in the relevant part, especially if it's not something that's covered by the presentation. But I think the majority of the questions I've seen so far will be answered. So let's get started. So thanks everyone for joining. For those of you that are joining for the first time, welcome. Hopefully you're not too worried about the now live corporate tax regime. If you are, then ideally by the end of this, you'll be a little bit more comfortable around what's required. For those of you that are joining, that have joined us before for this webinar, there have been some updates, especially late last week and yesterday, which we'll discuss around free zone exemptions. It's a little bit technical, so not sure how much relevance it'll have, but we'll still go through it. In the previous webinar, I went through the updates at the start, so that those of you that have been before, didn't have to go through the whole thing. I'm not going to do that this time because they're quite relevant to certain. These updates are quite relevant to certain parts of the presentation, so we'll be doing it as we go. But again, for those of you that are joining us for the first time, welcome. Great to have you here, and let's get started. Okay, I am going to share the screen. One moment, that should come up. There we go. Okay. Sorry, I'm just going to fix my screen so that I've got the Q&As there. All right, so the first question I get asked, and I've spoken to probably 500 businesses, maybe I reckon closer to 1,000 now, and the first question I get asked is always, when am I taxable? Okay, so when does the tax apply to me? So this all depends on your financial year. Now, there is a very easy rule for this. So if you are in a free zone or mainland, with the exception of DWTC, but pretty much every single free zone, if you started your business, or if you incorporated your business before the 1st of June 2023, then you become taxable on the 1st of January 2024. Okay, so if your business has been going for a couple of years, or if you started it and if you opened your business in the first half of this year, you actually don't become taxable until the 1st of January 2024. That's because all of the free zones, most free zones with just a couple of exceptions, and the mainland have a rule whereby your financial year aligns with January to December. Okay, now the way that the tax laws are set out, you only are taxable for your financial year which starts after the 1st of June 2023. So for most companies, that is the financial year which starts on the 1st of January 2024. So for most companies, that is when you become taxable. I will quickly talk about the exceptions, okay? One exception is if you have ever changed your financial year. Now, you would know if you have done this, you normally have to do it by a director's resolution and do it through the free zone. So if that doesn't sound familiar, if you don't think you've ever changed the financial year, then it's very unlikely that you have. That means you're taxable 1st of January. If you are in DWTC, okay, so Dubai World Trade Center, they have a bit of a different approach. So if you check your memorandum of association, okay, it'll say normally on page 4 or 5, it has your fiscal year, and that tells you when your financial year runs. Okay, so when you're looking at that, if you're a DWTC company, you just need to remember that tax for you will be the financial year that starts after the 1st of June 2023. So if your MOA says that your financial year or your fiscal year runs from August to July each year, that means that you were taxable from the 1st of August, so you should have everything in place. The third exception to that 1st of January rule is if you have just started your company. So if you opened your company after the 1st of June 2023, you're effectively opening that company into a live tax environment, and so you are taxable straight away. So anyone that's opening their business now or last month or in July or June this year, you're actually taxable straight away. It's only if you opened the business before 1st of June 2023 that you don't become taxable to the 1st of January 2024. So the majority of people taxable 1st of January 2024, and so the requirements that we're about to walk through, for most of you, you need to have them in place by January 2024. For others, normally, if you've just opened the business, you sort of have to have them in place right away. Okay. So the first thing I want to talk about is the compliance steps. Now, you will get sick of me saying this by the end of the webinar, because every company needs to do at least 3 things, right? So every company needs to register for corporate tax. Every company needs to do keep proper accounting records, so proper bookkeeping. And then every company will need to file a tax return, okay? I'll go through the sort of different scenarios about what type of filing a company might want to do. But the only difference here is around the filing, okay? The registration is the same process. You don't register for a exemption or anything. You just register for corporate tax. The accounting, there's a couple of standards which they've just confirmed, but we'll go through this. And then in the start of 2025, or some companies it'll be sooner, you'll need to file your first tax return. There is a slightly different compliance requirement for free zone companies if you want to go for that free zone exemption, which we'll walk through in a bit more detail. In those cases, you need to get a set of audited accounts. The only excuse me, the only scenarios where you have to do audited accounts are if you're going for that qualifying free zone exemption, or if your revenue is more than 50 million dirhams. So if you're not falling into those 2 buckets, you don't need to worry about doing an audit, but you do have to keep proper accounting records. So what does that mean? All right. We had an update yesterday from the FTA, just confirming the accounting standards that need to be used for corporate tax. So there's nothing new here, really. It was just really a confirmation, but the main accounting standard to be used is International Financial Reporting Standards. However, that is mainly for larger companies. Smaller companies can use a simplified version of IFRS, which is called IFRS for SMEs. And smaller companies still can use what's called cash basis accounting, which just means you do the accounting based on your bank statement pretty much. However, it doesn't matter which standard you use, you still need to actually produce proper financial statements. Okay, and we'll go a bit more about this when we talk about things like the small business relief. Very, very important. Okay, if you don't keep proper records, so proper accounting records, the fines are quite significant. Okay, so you get a 10,000 dirham fine for the first time that you don't keep proper accounting records, and then that escalates up to 20,000 pretty quickly. I'm just going to quickly check some questions. Just a second. Yeah, so there are a few questions around this, around audit and accounting. So I'll just check these as we go. All right, so you don't need an audit for the small business relief. We'll cover that in a little while. You can't just use your bank statements, okay? And you can't just send in your bank statements to the Federal Tax Authority. You need to be doing proper accounting. So I'll use an example, right? If you are going to file for the small business relief, which we'll talk about, you need to be able to prove that your revenue is less than 3 million. So you need to be able to prove that by showing to the FTA that you've used proper accounting methodology, and under that methodology, your revenue is less than 3 million. Okay, you can't just sort of sit back and do nothing, and then maybe if the FTA come calling, you'll show them your bank statements. That's not how corporate tax works. You need to be proactive. You need to have all your accounting done properly, so that it's there to be submitted in your tax return. Another question I get around, do you need a bank account to register for corporate tax? No, you don't. So put it this way, the tax man doesn't care about how the money is received. It could be all could be all cash, could be whatever. The tax man still wants their cut of tax, all right? They still want their share. So it doesn't matter if you have a bank account or not. If you have a company, you need to register for corporate tax. There's nowhere in the corporate tax registration that asks you to confirm a bank account. So, it's something that needs to be done regardless. All of you have asked, just to clarify, so if you open a business in September 2023, your first tax year runs from September 2023 to December 2024. Okay, so you basically, if you opened your business after the 1st of June 2023, you're taxable straight away, okay? Because you're straight into a first financial year, and so you're taxable straight away. I saw a question just around here about DWTC. Let me jump to that one. Stanislav, I'll get to the question around sales outside of UAE, but what you need to be mindful of is that if you have a company in DWTC, you need to check your MOA, your Memorandum of Association, and that'll show when your financial year is. And if your financial year starts in June, July, August, September, October, November, or December, that means you're taxable already. Okay, let's move on. So, everything we've just spoken about and everything we're about to speak about, you can either try and learn for yourself, but you may have heard this already, that Virtuzone, we're doing this tax ready package for free. So we're doing the free registration. We'll get you up all set up and running on accounting, including accounting software, and it comes with the 0 penalty guarantee, right? So those penalties we were just talking about, we make sure that you're not going to get hit with those, and if you do, then we pay them ourselves. The reason I'm putting this at the front of the presentation instead of at the back is that I want to make it clear that everything we're talking about, you can either try and work it out yourself or just jump on and register at taxready.ae, and we get all that underway for you. I always get asked on this because it's free. What's the catch? What's the lock-in? Look, there's no lock-in or anything. You don't have to put in credit card details or anything like that. Basically, it's a try before you buy sort of setup. So you come on, we register you, we give you a sample of the accounting service, and then if you want to stay on with us, great. We'd love to have you. However, if you decide that you want to go away and learn it all for yourself, or go and hire spend the additional money to hire an accountant, then that's fine. There's nothing locking you in. We're happy to have helped, and we'll help you on your way. But we're very confident that our quality and our price point means that most of the people who come on with this free package will be wanting to stick around. Okay, so hopefully you'll sign up for that, and we can take care of all of this for you. But let's run through it anyway, so that everyone's aware of it. Oh, sorry, I just saw a question on bookkeeping. Do we need to keep receipts, or is it okay just to keep the bank statement? Look, better to keep receipts as well. So the way that bookkeeping or accounting really works, it's for the most part, it's about matching up those invoices to what the money that actually comes in, so you recognise the correct revenue numbers and everything. So we encourage all of our accounting clients to make sure they keep receipts, keep invoices. It's a very easy process. People just dump all of those documents on us, and we sort out the rest. I just had a question here about financial years. So if the company is opened after 1st of June 2023, then it is taxable straight away. Correct. But can a company opt for a longer financial year until 31st December 2024? So by default, your first financial year will actually run as that longer year. So the way that the free zones work is they have these rules where An easy way of putting it is you can't have a financial year shorter than 6 months, and you can't have one longer than 18 months. So what that means is if you open your business in August, for example, your first financial year will run from August 2023 all the way through to 31st December 2024. So that first financial year will be a long one, and then you start from 1st of January 2025, 1st of January 2026, so it gets aligned after that. I'm getting a couple of questions around the cost of our accounting services after the trial and after the 3 months. So it depends on the activity, but for example, if you only have a company for visa purposes, so there's no revenue going through it, it's around 100 dirhams a month. And then if you have an active business, you're earning revenue, you've got activities, you need all the filing and everything. It's around 400 to 500 dirhams a month going after that. So still, we've priced this deliberately much cheaper than hiring an internal accountant, and we've also got that option for those for those companies that only really have a company for visa purposes, but also we provide a lot of support and consultation and everything for the active companies as well. A question from Christian: is it a requirement from the government or just best practice, the bookkeeping? It is absolutely a requirement from the government. So the legislation that we just got yesterday was confirming the standards that are required. So this is all law now, and if you don't meet those requirements, then you get that 10,000 dirham fine. So it's a pretty significant fine, especially when you can do it with us for much cheaper without any risk. Crispin, a question here around what accounting software do we use in our package? Is it necessary to use one? Which ones would you recommend? Yeah, so we have Virtuzone. We're very flexible about which software we put our clients on. We actually choose one that suits you best, so we take into account pricing, complexity. Do you have one currency, multiple currencies? Do you require depreciation on assets? All of that kind of stuff we look at, and we choose one. So we obviously have very preferential pricing with all of our software providers. Because we obviously work with them all in bulk. So look, we use everything: QuickBooks, Zoho, Xero, Wafik, Tally. I know the list goes on. My team will be annoyed at me because I'm sure I've probably forgotten a couple. But yeah, and to your question, is it necessary to use one? Absolutely. Accounting software is so good these days that you can just, as long as you have someone doing the entry that knows what they're doing, which is us, making sure that everything's accounted correctly, it's so much easier than trying to do it in Excel or something like that, because you also have requirements around keeping your data available. So storing your data, you have to store it for 7 years, which is a lot harder if you're just trying to do it all in Excel or do it yourself. So everything's contained in the software, so that if the FTA does come knocking, then you've got it all there. We also offer VAT filings, absolutely. It's obviously it's an additional cost, but it's something like, I think it's 500 dirhams a quarter to do that, or less, and that includes actual compliance as well. Okay, let's jump into the. Thank you for those questions, by the way. I do love talking about the free package that we're offering. It's it's a big investment on our part. So I could talk about that all day, but let's get into the interesting stuff. So I want to talk about the layers that you sort of need to go through before you actually become a tax-paying business. Okay, so if you are a free zone company, there are basically four levels of, or four things to look at before you become a taxable business. All right. So the first two are around around the qualifying free zone person, or easily termed, or more easily termed, are you the free zone exemption, right? So do you qualify for the free zone tax exemption? This looks at two things, okay? And I've simplified this a lot, but hopefully it makes sense, right? So the first thing they look at is, or one thing they look at is the geography of your clients, okay? So does 95% of your revenue come from other free zone companies? All right, so that needs to be UAE free zone companies, not individual people. UAE free zone companies. If 95% or more of your revenue, or of your sales comes from UAE free zone companies, then it's likely that you'll qualify, or that you'll qualify for the free zone exemption if you meet a couple of other criteria, which we'll go into soon. The second sort of hurdle around, or the second thing they look at for that free zone exemption, looks at the activities of the business, okay? And that says, all right, the ministry has released a list of what's called qualifying activities, and if 95% of your revenue comes from or is derived from those qualifying activities, then you'll meet the qualifying income test. Okay, I'll talk about the other steps in a second for that qualifying free zone exemption, but those are sort of the big two hurdles that most people look at. You only have to meet one of those, right? So if your clients are all in UAE free zones, great. You'll meet the qualifying income exemption. You'll meet the qualifying income category. If 95% of your revenue comes from a qualifying activity or qualifying activities, great. You'll meet that qualifying income criteria. You can also be a combination of both. I think that just gets a bit confusing, but we'll get to that. All right, let's say that you don't meet either of those criteria. So you only sell, let's say, to outside the UAE, right? So you don't meet the geography criteria. And let's say you don't qualify for any of the activities. So let's say you're a marketing consultancy, which isn't a qualifying activity, and you only have one client and they're overseas in the US, okay? So you miss out on, you don't meet either of those criteria, right? So what you would then be looking at is a thing called the small business relief. So this is item number 4, really. Small business relief says that if your revenue is less than, your annual revenue is less than 3 million dirhams, then you're exempt from paying tax. And this rule runs from 2024, 2025, and 2026. Okay, so just to confirm, it's based on your revenue, so your top line sales, turnover, revenue, right, of 3 million. This isn't your profit, right? So you don't look at expenses, it's just looking at your revenue, and this runs until the end of 2026. So just to confirm, if you are a free zone business, right, your clients are all outside the UAE, for example, so you don't meet that UAE free zone company criteria. You're not doing a qualifying activity, then you can look at the small business. So that means you've missed out on the qualifying free zone exemption. That means you can then look at the small business relief rule for 3 million. Okay. So let's bring this one more step along. Okay. So let's say you don't meet the qualifying free zone criteria, and your turnover is, say, 4 million dirhams. Right. Your sales are 4 million dirhams. That means you are a taxable business. Okay. What that means is that they disregard your revenue for a second, so they don't look at that revenue test, and they start looking at your profit. Okay. So the profit, the corporate tax is levied on profit. Okay, but it's at 9% on your profits over 375,000 dirhams. The first 375,000 dirhams of profit is tax-free. It's only once your profit gets up above that you start paying tax. Okay, so for example, if you had 4 million dirham of revenue, so you don't meet that small business relief, and your profit was, say, 1 million dirhams, that means you're paying tax on 625,000 dirhams, because the first 375 is tax-free, and then the remaining 625 up to that million dirhams of profit is taxable. Okay, some questions here. If you qualify for small business relief, do you still need to do the registration? Yeah, absolutely. So Sarah, to your question, so Sarah's question was, all right, if my revenue is less than 3 million dirhams, do I still need to register and do the accounting? Yeah, absolutely, because you have to prove to the FTA that that's the case. Okay, so the FTA doesn't know that your revenue is less than 3 million. You need to show them with proper accounting and everything that your revenue is less than 3 million. I think there's a bit of confusion around, I guess, the scope of corporate tax. And maybe it's because of the way that VAT works. So we'll compare it to VAT, okay? So VAT is something that people opt into once you register for once you hit a certain threshold, or if you hit certain criteria, and it's not optional, but it's something that doesn't apply to everyone, and you only go in when it does apply. So that's VAT. Corporate tax is the opposite. Okay, so just like everywhere else in the world, every business or every company is assumed to be a taxpayer. Okay, so and if that is not the case, you need to prove that to the FTA. Right, so it doesn't matter if you're a tiny company with no, or you've just opened the company, there's no revenue, or you've qualified for the small business relief, or you qualify for the free zone exemption. You need to prove that to the FTA, right? If you don't file a tax return, you don't register, you don't do your accounting, then the first act of the FTA will be to fine you, and then come, and then come asking. All right. So this isn't an optional thing. Every company needs to do the registration and the accounting and file a tax return. Okay, because it's the tax return where you need to prove whether or not you're paying tax. I say this quite often in webinars, and yet I still get the question of, I'm registered in this free zone and my revenue is this. Do I have to register and do accounting? Yes. I think, before you even ask the question, if you have a company, then the answer is yes, you do need to register. You still need, you need to do the accounting. I hope that clarifies. All right. So it's very few exceptions for people that don't have to register. The only ones that don't have to register are, for example, freelancers, where there's no separate entity. They only have to register when their revenue hits 1 million dirhams. All right. But again, if you have a company, right, if there is a separate entity to you, even if that company is called, John Casey LLC, sure, it's in my name, but it's a separate company. It has to be registered, and I have to file. All right, let's jump through, and then we'll talk a bit more about each of these exemptions as we go. So we've just talked about the criteria for for qualifying for the free zone exemption. All right, so we talked about the qualifying income. Okay, so 95% of your revenue needs to either come from other free zone companies or from you conducting qualifying activities. Just to confirm, the free zone companies thing, that means that it doesn't qualify if you are selling outside the UAE or if you're selling to mainland UAE. All right, it only counts if you're selling to UAE free zone businesses. Okay, just a second. Okay, there is a part here which is called excluded income. All right, so let's say you are you're getting 95% of your revenue from UAE free zone businesses. That revenue can be anything unless it is from excluded income, which we'll get to in a second. But excluded income is things like, and I'll come back. transactions with natural persons. Okay, so sales to an individual, right? That doesn't count. Which, you know, by definition of that term, the criteria, it has to be UAE free zone companies. Obviously, you know, that's an excluded activity. Other things, I don't know how relevant this will be to everyone here, but excluded activities are banking activities, insurance activities, finance and leasing. So, you know, if you're undertaking that kind of activity, it's probably a bit different. But the main part here is that excluded activities are, the most significant one are transactions with natural persons, so individuals. Another big one is showing adequate substance in the free zone. So this is sort of the next hurdle. So if you meet that qualifying income or that qualifying income criteria, what you need to do is you then need to keep adequate substance in the free zone. Now, everyone who's ever done an ESR return or ESR notification will know something about this. Basically what they're doing here is making sure that the free zone company isn't just a shell company to pass through, you know, income for tax reasons. The big one that they are, a big one example that they are trying to avoid here are people putting ownership of things like a trademark in a free zone company, and then passing income or charging revenue for use of that trademark, and that's all that company does, right? So the company's not doing anything; it has no substance. It just owns a intangible asset, and as a result, it's revenue is being sent through that company. Okay. So one question as to why you would go for the free zone exemption if you have small business available to you. The free zone exemption goes beyond 2026. Okay, so it's a bit, the free zone exemption is a bit more strict. It has more criteria, so you have to do an audit. But it will keep going beyond 2026. I'm not sure, there's no indication of when it will end. I expect it will carry on as long as the free zones have committed to, being tax-free, which is 50 years. So it continues on, whereas small business relief obviously finishes at the end of 2026. And we don't know what the story will be after the end of 2026. I think they'll probably do away with the small business relief after 2026. I think this has been brought in as a nice friendly rule to soften the blow on startups and those small and smaller medium businesses, so that they don't actually have to pay tax until 2027. Okay, obviously small business relief, very friendly. It's a very broad, very high definition of a small business with 3 million of turnover. I think a lot of businesses will be taking advantage of this. Doesn't require an audit, just requires proper accounting records, and then you'll just file those accounting records as part of your tax return. But just to reiterate, even if your revenue is less than 3 million, you still need to prove it. So you still need to register, you still need to do proper accounting records, you need to file a tax return. And a reminder, this is annual turnover of 3 million, okay? One little rule to be aware of is that if you go over that 3 million in a year, then you can't get the small business relief in future years, okay? So let's say in 2024, you had 2.5 million of revenue, great, you'd get the small business relief. 2025, you went up to 3.5 million, right? That would mean you're a taxable business and you'll be paying tax on your profit. If in 2026 your revenue went back down to 2.5 million, unfortunately, because you've gone over in a prior year, you can't claim small business relief in a subsequent year. So you'd miss out on it for that last year of 2026. Anthony, I hope that answers your question. Okay, and the last one, taxable business. So using that example before, so as soon as you go over that 3 million revenue threshold by 1 dirham, you become you become a fully taxable business. Okay, so what we were saying before, you get 0% tax on your first 375,000 dirhams of profit, and then it's 9% on everything over 375. We do, there are a lot of questions around deductible expenses. The main one is around owners paying themselves a salary. Now, just keep in mind that you only need to worry about deductible expenses if your revenue is more than 3 million, okay? Because if your revenue is less than 3 million, they're not going to look at your profit. It's only about, you basically file an exemption. If your revenue is more than 3 million, that's when you need to start looking at tax efficiencies and tax efficient structures. The biggest one for many small businesses will be owners paying themselves a salary. Okay, I get this question all the time. So, if your company earns more than 3 million dirhams of revenue, there are two parts to owners paying themselves a salary. Okay, so the first part is from a compliance perspective and a visa perspective. Are you in a position to pay yourself a salary? Okay, so we don't have the final rules around this, but I'm going off what we see in Saudi, where we've done a lot of tax work in other jurisdictions around the GCC. So what we see in other jurisdictions is if a salary is to be deductible, you need to have all the compliance or the contract in place. You need to be on the correct visa, an employee visa, so that you can be an employee of the company. Otherwise, it can be deemed as a dividend to the owner. Okay, so first step, make sure that you have all your ducks in a row to actually pay yourself a salary, so that it doesn't get deemed as a dividend. Okay. The second part of this is, all right, how much can you actually pay yourself? All right, and this is the one I get all the time. So as yet, right, we haven't had anything from the Ministry of the FTA that directly talks about owners paying themselves a salary. Okay, so what we have so far is, and there's a lot of detail on this, is around payments to what's called connected persons. Okay, so payment to a connected person, and a connected person could be a natural person or a legal person, a company. Where it comes to an owner, so that would obviously be the owner's spouse, children, uncles, grandparents, niece, nephew, great great grandnephew. It goes all the way down to 5 degrees of separation, or 5 degrees of relation, to be deemed a connected person. All right, and it's the same for directors of the company, owners of the company, and related parties. So companies that the owner owns, other companies that the owner owns. All right. So, if you are a connected person, there is a benchmark for what you can pay yourself as a salary, and what the law says is that you must pay yourself an amount that is market value or arm's length. Okay, so if you're the owner of a business, but you were to leave that and go and work for an unrelated business in the same role, what kind of salary would you be earning in that role? Okay, and that is the salary, or roughly the salary that you should be able to pay, or that you'll be able to pay yourself out of your business. Now, in some industries and in some roles, it's very, very hard to get a number on. We have been doing work for some companies that want to get ahead of this and do benchmarking exercises, so they look at publicly available information in similar companies and get the salary benchmarking that way. So that's one way of doing it. But the overall principle is that it's got to be reasonable, right? So you can't go and, if your business is making 4 million dirhams of revenue, you can't go and pay yourself 3 million dirhams in salary and then pay your child 1 million dirhams in salary for doing some photocopying, right? So it's got to be reasonable, and there are ways that you can do benchmarking exercises to make sure that it's accurate. Now, I am hoping that the ministry or the FTA will release some kind of guide around this, because it is such a prevalent issue, especially in the UAE, where so many people are here, with companies of their own for visa purposes, and they use that to invoice their clients. It would make a lot of sense for the ministry or the FTA to release a guide specifically around owners paying themselves a salary. So, fingers crossed we do see something like that. But in the absence of direct guidance on that, we need to go by the market value arm's length approach. If you don't have all of those things aligned, right, and you're withdrawing money from the company, it would be deemed to be a dividend, and dividends are paid after tax. Okay, so it wouldn't be a deductible expense. It would only be, paid out of post-tax profit. Just a reminder, this only really applies right now for those companies earning more than 3 million dirhams of revenue. If you're earning less than 3 million dirhams, then you'll be able to get the small business relief, and they won't, your expenses won't really be looked at. Question from Raya. So does annual bonus form part of the salary for owner, which is limited based on market benchmarks? Yeah, so the way that the FTA will look at it, they will look at the total remuneration that was paid to a owner. Okay, now that could be salary, that could be bonus, that could be, does the company pay for the owner's car, which they use on the weekends? Does the company pay for the owner's residential rent, right? So anything that's not related to actually generating the revenue of the business, anything that's paid to the owner outside of that, that will be deemed as part of remuneration. So think of it this way: it's as if the company has paid that as a salary to the owner, and the owner's gone and paid their rent themselves. You've just cut out the middleman, right? But the FTA will treat that as remuneration to the owner. Okay. Now, there has been some updates on, actually just before we move forward with this. So we've kind of run through the compliance steps and the different categories of corporate tax, of who will need to pay, what you need to worry about. Just want to make very, very clear, and I'll say it just one more time, doesn't matter which, if you're in a free zone or if you're in DED or mainland, if you've got zero turnover or you're under 3 million, you still have to register, you still have to do your accounting, and you'll still need to file a tax return. Okay, there's no excuse not to do this, especially given that we are doing this for free for you at Virtuzone. Please don't sit on this until the end of the year, and then you start getting fined. You find out that you realise that you should have been doing accounting, and all of a sudden you can't prove what your revenue is. Everybody needs to actually do something here. Okay. Just a quick question from Melanie. So for small business relief, do you have to have had less than 3 million dirhams since the company was opened? No, it only looks at your taxable years, right? So you could have 6 million dirhams of revenue, this year when you're not taxable, but then next year, if your revenue is less than 3 million, in that 12-month period, you qualify for small business relief. It's not a cumulative thing. It doesn't add up year by year. It's only the annual revenue. So 2024, your revenue is 2 million. Great, you get small business relief. 2025, your revenue is 1.5 million. Great, you get the small business relief. 2026, your revenue, in that year goes up to 2.9 million. You still get the small business relief. It's only if it goes over 3 million in a single year that you become a taxable business. Zaid, you've got a question here. You're jumping ahead. So let's talk about the free zone exemption, because there was an update last week where we got some clarity around the qualifying activities. I know it looks like it cuts off the bottom, but that's okay. Now, I've just listed them all here. We do have more details around these. I think that the general rule is that if you are operating a service business, right, then it's unlikely that you'll be meeting a qualifying activity unless that is doing headquarter services to a related party. So if you have two companies and one company is just doing management services for your other company, then that might qualify. The other one is around logistics services, which we'll go into soon. All of the other qualifying activities are very much sort of heavy industry based. So you'll see it's manufacturing, processing, heavy industry or investment based. So manufacturing, processing. There's a new one here called trading of qualifying commodities, which we'll talk about on the next slide. Holding of shares, management of ships, reinsurance, and you got some very UAE, Dubai activities in there. So financing and leasing of aircraft, for example. But there are a couple in here that might apply to smaller businesses, and we'll go through these in a second. Excluded activities, we'll talk about. We've talked about previously. The one change from the last webinar that we did is there was previously this ownership of or exploitation of intellectual property assets, so IP. That has now been removed from excluded activities, and there's a new category of qualifying activity or qualifying income, which is called qualifying IP, so qualifying intellectual property. This is where we're going to get a bit technical, so stick with us, as we go through this. We'll go to some examples after this, but we're just going to quickly run through these legislation updates for free zones. So, new qualifying activity, the trading of qualifying commodities. So, there needs to be the actual physical trading of qualifying commodities and associated derivatives. Big part here is it's got to be traded on a commodities exchange, so it's different to just doing it on the side and doing it yourself. And significantly, it can be in any free zone, not just a designated zone, right? Which is quite significant because, as you'll see in a second, one of those qualifying activities is very much limited to designated zones. And there is a new category of qualifying income called qualifying intellectual property, so qualifying IP. So, Zaid, your question here is IP selling excluded from exemption for free companies. So you can't actually. I haven't got all. I won't put all the detail here because it's quite complex. But what this qualifying IP rule is looking to do is ensure that companies who are developing intellectual property here in the UAE will benefit from an exemption. Okay, so. I did think it was quite strange that they had it as an excluded activity because it sort of goes against the idea of promoting innovation, which is obviously a huge part of what the UAE government is aiming for in the country. But what they've done is they've done it in a way that it really still promotes the generation of IP in the country. So the way that it works is you've got to look at how much you've spent on research and development for that intellectual property, and that sort of determines how much you can actually claim as exempt income. What it doesn't do, right? So I used an example before around a trademark being placed in a company, basically a shell company, and then that company charges other companies for use of that trademark. So that will still be picked up by the adequate substance rules. And sorry, I know we're getting quite technical here, but we'll move on in a second. So basically what this new rule does with, in conjunction with the adequate substance rule, says, all right, if you are genuinely here in the UAE and you're creating new products, you're doing you're creating new new innovative items, the UAE wants to give you an exemption for that. But at the same time, they need to be very careful that people aren't using the UAE to dodge tax from around the world by putting in intangible assets such as IP rights or trademarks, and using a UAE company to charge for those and put revenue into the UAE. So it's going to be this is probably as complex as the free zone rules are going to get, because it's going to be very hard to show what was R&D expenditure, what is qualifying, and therefore what is qualifying IP income. It's going to be quite interesting to watch, but I think what it does mean is they'll be very strict around the substance piece if you are a IP business. Okay, thanks for bearing with me on that technical part. Let's jump back to some of the things that we sort of already knew. So, still on free zones, there was a consultation document released a couple of months ago, which had some proposed rules. Those rules have now been confirmed. Okay, so the big one here, which is, well, when I say the big one, the one that I have found to be most relevant for a lot of the clients that I've spoken to, the smaller, smaller and startup, is around the sort of dropship model. Okay, so when you buy goods from a company in country A, and then you ship them directly to a customer in country B, and they never set foot in the UAE. Those goods never enter the UAE. Okay, that will be exempt if you are registered in a designated zone. Okay, so a designated zone is different from a normal free zone. Right, so designated zones are normally things like areas like JAFZA, which are bonded. They've got a security gate to make sure the goods don't go in and out. Without proper authority. So if you operate a dropship model and you are in a designated zone, then you will have qualifying income and will hopefully be able to get that exemption. This won't apply to you if you are in a standard free zone. Okay. Okay. There's another part to this which I haven't actually covered, but if you are importing goods through a designated zone company, and you are selling those goods from the designated zone to a company in the UAE, right? Then that is also exempt. All right, but you need to be in a designated zone for that exemption. Okay. Logistics services, so a couple of other ones that I thought might be relevant. So logistics services, it is pretty self-explanatory. It's pretty self-explanatory. The only thing it doesn't include is the last mile delivery. So if you are, basically courier companies won't qualify under the logistics services. Manufacturing, again, in a free zone or a designated zone, that will be exempt. There's no change there. All right. I'll just check quickly if there are any other questions around the free zone. So just a couple of questions here. Corporate tax. So before we get into examples, I'll just quickly run through some of the questions that have come through. So, is corporate tax applied on a freelance company in a free zone? Customer is outside from geographical area of UAE. So just a reminder, the only kind of geographic criteria that is relevant for corporate tax is, are you selling to companies, selling to other UAE free zone companies, right, for the qualifying income, or are you in a designated zone or a free zone? Okay. When it comes to clients, the only thing that matters are they in a UAE free zone? All right. If a client is outside the UAE, it doesn't matter. It's the same as if they're in the UAE mainland. A freelance company. So Mohammed, just to confirm. So if you have a freelance permit, that means you don't actually have a company. So if you're acting as a freelancer, that means you're acting in your capacity as yourself. So it's not like you are a limited liability company or anything like that. You're acting in your own name, you just have a permit. If you are just acting in your own name as a permit, so as a freelancer, or if you have one of those e-trading permits, and you're acting in your own name, you only have to register when your revenue hits 1 million dirhams of revenue, okay? Everybody else has to register immediately. Has to register without exception. So basically anyone, if you have a company, you need to register. The only people that it's slightly different is if you have a permit. It's the easiest way to think of it. If you have a permit instead of actually having a company, it's a bit different. Let me just quickly run through some of the other questions. Helena, paper trading companies registered in a designated free zone. Goods are sold directly from the supplier to clients outside the UAE. So if the supplier is outside the UAE and the clients are outside of the UAE and you are in a designated zone, then that should be qualifying income. Qualifying for the exemption is what I mean. Melvin, can an invoice from a natural person be considered as claimable expense? Yeah, it should be. All right, some other questions which we are sort of getting through already. Okay, let's run through just a couple of quick examples. How are we doing for time? Got about, 10 minutes left? All right, yeah, we'll jump through a couple more examples. Oh, sorry, no, it's already 11 o'clock. All right, look, we've covered most of this already. So I'm using the example here of a non-qualifying activity, so marketing consultancy. Even if your revenue all comes from offshore, right, you're not going to be exempt, right? This was a big sort of change from what people thought originally. If you are a marketing consultancy, but 95% of your revenue comes from free zone companies, then you will meet the qualifying income category, okay? I might quickly just jump ahead. Oh, good question, Niels. Can you divide your activities into 2 or more legal entities based on, no. So while the ministry have been releasing these rules, they have been very clear around what's called anti-abuse laws. And one of the main things they are looking out for are people splitting their company apart to either, the main part of that rule is everything you do must have a commercial rationale, and that commercial rationale does not include avoiding tax, okay? So the most common one is, can I just change my business, split my business in 2 so that instead of having 6 million or 5 million in one company, right, and missing out on the small business relief, I'm just going to split it in half and have 2.5 in one company and 2.5 in the other. No, the FTA will pick up on that very, very quickly, and deem it to be one company and treat it as taxable. So Heidi, if 50% of your revenue comes from offshore, 30% free zone, 10% mainland, and 10% others. No, so it needs to be 95% from free zone, from other free zone companies. Okay. I don't think we need to go through this again. I think I've said it many times. Registration, every company needs to register, do your accounting, file a tax return. And just a reminder, everything we've talked about here, right, you can either try and manage all this yourself or just jump on the free one, and we can take care of it all for you. Again, it's genuinely free. If you take the service and you decide to go elsewhere and hire an accountant and spend all that extra money or whatever, absolutely fine. There's nothing locking you in. We just really hope that you want to jump on and give it a chance. Okay, so we've just gone over time a little bit. So look, thank you everyone. We'll obviously be holding more webinars as we do each month. Please, if you want to get all up to speed free of charge, just jump onto taxready.ae. It's very straightforward. You can follow the instructions, and we take care of it all for you. So hopefully we'll deal with you on there. Thanks.